Next business that we're going to analyze is Apple. And Apple's really interesting because I wasn't really tracking it for the last couple of quarters, but it's becoming interesting now even more because Apple's come out with something called Apple Intelligence. We'll talk about it, but just to give out the numbers in short, the iPhone sales, that's their bread and butter, 46.2 billion versus an estimate of 45 billion. Again, the same trend, beating numbers, beating estimates. Interestingly, the result included 10 days or so of sales for the new lineup of iPhones and new lineup of Apple Watches and you know the AirBuds. So it's not a true indicator. It's not a clear indicator of how the iPhone business is doing. But from what we've heard from third-party sources, it's not doing really good. But it's the interesting, promising part is how Apple plans to involve Apple Intelligence on its new lineup and how that will work. So it will be a combination of software plus hardware that is actually going to drive the next set of sales for Apple. The next is services business. They're doing extremely well on services, 24.9 billion versus 25.2 billion, which they didn't beat the estimate. But what is interesting here is how they've been constantly growing the services business. Now, services includes all their revenue from Apple Music, Apple TV, plus all those Apple Care that you buy, which I never buy, but people do buy those. Their current gross margin on Apple services, astonishingly, 74%. Their overall company gross margin is just under 45-ish, where the services industry, like the services sector, is just raking in money, 74%. If we just consider Apple's current services run rate, the revenue is at 100 billion. It sits 40th. Just the services business sits at 40th in the Fortune 500 company list. It beats big names like Morgan Stanley, Johnson and Johnson, just on revenue from one arm of the business. Now it's been growing since, I think, steadily since 2010 or so. It's just been constantly growing. I feel that's one space that really Apple should focus more of their attention on. Currently, I would say hardware is one of their main focal points, but services industry, it's just been rising out of nowhere, and people, even though it's not beat the estimates this earnings season, it's just I feel one of the major drivers for growth in the long term. Another main point is that there's no Apple sales, discussing Apple sales without discussing Chinese markets. That is a big cause of concern. It stood at 15 billion for this earnings season versus an estimate of 15.8. But what is more kind of concerning is that this is the sixth consecutive quarter of growth decline in the Chinese markets. They've had intense competition in terms of other players like Xiaomi and Huawei, but six consecutive decline in revenue over one of the most kind of, that's their region. That's where Apple actually depends on for revenue. If you're seeing six consecutive, periods of growth decline, that's a cause of concern. And that I feel is the major reason why I believe Alphabet's a much better play, a long-term play than Apple, because if we break down Alphabet's region-wise, kind of distribution, it's all in the green. I'll show you the distribution for Apple. It's not really promising. Obviously, it might change in the next couple of quarters, depending on how Apple Intelligence and iPhone 16 and the future lineups perform. But it's just not looking good. One of the things from the conference call that they actually pointed out was the introduction of Apple Intelligence and how it's going to be a reiterative process. It's not a one-time release. Obviously, it's like the iOS releases, so it's going to keep getting better. I I did see a few videos about how Apple Intelligence currently has those features that they're promising. Very tame features, not a lot of promise there, at least for the first release. Um, the best, I think, service for Apple Intelligence was um, the notification summary. But other than that, it's just basic stuff that Android phones have got for years now, and that's been the case with Apple. But the next set of updates I'm really interested in is how they will incorporate ChatGPT into Apple's ecosystem inbuilt, so that you don't have to kind of open ChatGPT app, click a picture, or type to ask a question. Now you could just simply point your camera, and I saw this as a demo in one of the videos. So you can just point your camera at a restaurant, just the storefront, and you could see reviews, photos, photos of dishes, timings, menu, everything. It's just in beta mode, but that's something that I'm really interested in. And the reason why I'm also interested in seeing how this plays out is because Apple Intelligence is only compatible with 15 Pro and forward models. So you would see a lot of people shifting from, let's say, a 14 to a 16 just to get the Apple Intelligence feature enabled. So unlike the other features, let's say in 14 and 15, one major difference was, let's say, a camera enhancement. People are not that crazy about camera enhancements. You wouldn't really see a difference between, if you're not a photographer or like you're not into photography, you'll not really see a difference between a picture clicked on an Apple iPhone 14 versus an Apple iPhone 15. But Apple Intelligence, now that's something that an Apple iPhone 14 cannot do. So you will have to upgrade. At some point in time, they will phase you out, as they are kind of infamously doing with their batteries and other stuff. Now they will do it with their softwares as well, and they will try to phase you out and kind of get you to buy the next iPhone. Now that's, from a sales standpoint, it's very interesting. Again, a lot of things to be worried about. Declining sales in China, one of them. But other than that, there's this antitrust issue case against them in the EU markets that's actually troubling them. And this is in line with what I said earlier. Now, the regulatory compliance authorities are really stepping up, and they're not allowing these companies to get away with these things that they've been doing in the past. Apple had to pay 13 billion euros, and this was included in the earnings this quarter. It had to make a 13 billion euro payment to Ireland as a part of the EU government, the EU courts deciding that it was unlawfully getting tax advantage from the Ireland government in terms of how they treated their global income. Apple's headquarters, European headquarters, are in the Ireland, and that's there for a reason. It's not like Ireland's their biggest market. Ireland's got the most, the lowest tax rates in the EU. Effectively, if you read the numbers and you try to kind of dive into it a bit, you realize that 2014, and you'll be surprised listening at this number, 2014, the tax rate at which Apple paid tax on its global income through EU, through Ireland, it's very interesting, 0.005%. And that's peanuts. Like, obviously, Apple pays all of its taxes, and in their eyes, it'll be like lawfully they're doing it. But a 0.005% tax is just bonkers. So the government, the EU court, kind of directed them to pay the remaining, what they actually owed to the Irish government. That's 13 billion euros. The funny part was the Irish government refused payment initially. They said they don't want this payment because the tax advantage that Apple was receiving, in fact, allowed Ireland to be, one of those opportunities to invest in, and that's their main USP for getting more tech companies to invest in Ireland. but a tax rate of 0.005% is just laughable. So the EU court decides now is the time, and they've included it in the earnings report this season. So it's not been a good quarter on those terms for Apple, and this is just one of those cases. How many more would be unearthed? How many more would be kind of picked up upon by the authorities? We don't know. Not very promising. Uh, Before I kind of end this, also want to kind of do the same thing with Apple. Um, Let me just share my screen for a second here. This is Alphabet. Obviously, we'll move on to Apple. On a YTD basis, it's just 15.78%, and if you remember, it's 21% for the S&P 500. So essentially, Apple's underperforming the S&P 500. Not something a lot of long-term investors would really love. If we check the metrics here, the iPhone revenue, I'll just pull this up. The iPhone revenue growth is just measly. It's not going anywhere. The services revenue, for sure, that's what we talked about initially. It's been steady, it's been ticking up, but the iPhone revenue, it's not going anywhere. In fact, the revenue growth's been poor, to say the least. Again, this is with a word of caution here that Apple Intelligence and its kind of introduction into the whole series would kind of, I hope, it boosts the iPhone revenue growth. But up until this point, it's just been dismal. If we go on to, just kind of dissect it further by the type of products that they sell, the products alone, the gross profit is next to nil. It's almost at 1%. This is after continuous series of quarters where it underperformed. It was in the negative, in the red. But if you see the services, that's a whole different story. It's just been ticking up and up. The growth is going up as a percentage. It's up. So that to me is promising. But because their main bread and butter is the products, you associate Apple with iPhones and not Apple Music. Some might, but I don't. That's a cause of concern. If we go back to revenue by segment, sorry. Check operating expense. You see how Apple has obviously been increasing their research and development expense. At the same time, the selling general SGA costs are kind of constant. I really like that. That's one thing that I like about the business, that they are heavy on R&D. They know that they have to up their game. They know that they cannot do justice to their customers by putting out the same iPhones every year, the same pro versions every year. There's no innovation. It's starting to pick up. They've started to invest more in R&D, which is a promising aspect. But that being said, it's just the products are not getting better. I don't know where this R&D is going, but it's not getting better. I would really hope Apple kind of picks up on the product side. For me, and we've not run the numbers in a DCF or a valuations model, but for me, I would stay away from Apple at this point in time. And one of the main reasons, just to recap all this discussion, one of the main reasons why I'll stay away from Apple is two things. One, the Chinese market's not doing good. Second, they are not building up on what's actually promising. Unlike Alphabet, who know what they're good at and they're using AI to bolster that. I don't know why Apple's not doing it. Why Apple is not improving the services business and focusing on it a lot more than just pumping money into products that look, feel, work the same way for years. Is just I don't understand it, and for that reason, I feel like Alphabet's a much better investment option than Apple. But how does it look on the charts?
Yeah, I think it's a similar story. Before we take a look at the charts, it's had an opportunity to show bullish price action, but um, it's struggling. I'll be honest. But we'll sort of zoom out here
Hmm.
and see the bigger time frames. I think that's usually our North Star in identifying opportunities. But if we start with the monthly chart here for Apple, the ticker symbol is AAPL. We do see that it's holding above the major moving averages right off the bat. The purple is the 200 moving average, the gray is the 50, and the blue here is the 20 moving average. One important thing I want to highlight here is all-time high at 237 and 49. What I don't like about it right now is it's a square top. It looks like it wants to take a break, but I'm interested to see if it can hold this 199 to 200 level. This is an area where I want to see buyers' commitment. So if we get a nice smooth pullback, it would also align with the 20 moving average here. If it holds, I think this wouldn't be a bad idea to add to your position, possibly look at a starter position, or just wait on the sidelines because it's possible it could still test the 160 level as well, which would align with the 50 moving average here. So on the fundamental side, as James, you mentioned, Apple has a lot of opportunity to innovate. It is keeping its specific cost items stable. It's investing heavily into research and development, which are good signs, of course. At the same time, I'm still curious also to see how the Apple Intelligence narrative plays out. I think it's quite promising, but we'll have to see what happens in the real world and with case examples from real users giving feedback and how that trend sort of plays. So that'll have an impact on the long-term growth. But overall on the monthly chart, it's done pretty good. You know, it broke out of this flag here, this range, broke out, tested this level around 170, tried to break above 200, came back to test this level, and it's shown bullish price action. But my main concern right now is this square top here going into all-time highs. If we can get a few relatively stable pullback candles, red or green, heading into 200 plus, holding this level, and if buyers are committed, if institution is committed, and if investors are committed, this could see a further increase in all-time highs, even given with all of the concerns outlined earlier. On the weekly chart, again, this square top translates to a lot of overlap. What's concerning about it when you see it is you can't really figure out whether buyers are in control or sellers are in control. You could say it's sort of a range, so you don't want to sort of trade within it, or you want to wait till critical levels are established. So if you're waiting to see if all-time highs are reached again, if you want to see here if this 200 level is holding, those are some areas that I would look at. But overall, on the weekly time frame, it's above the moving average. On the 200, the 20, and the 50, it's clearly made new highs, but now it's starting to become a little bit concerning. And overall, you can also see that buyers are stepping up, they're holding, it gets pulled back when sellers come in. And now with this recent week, there's been a lot of selling happening. So it's bouncing off the moving average here on the 20. It's looking bullish overall. And we can even dial down a little bit more by going onto the daily chart. This is a clear range on the daily chart, with the low of about 215, with a high of about 238, 237.49. So you can wait to see how this level holds. If we see a continuation on the hold on the 215 side, I think this is interesting. And the reason we also have these short-term bearish candles, I'm going to move this right here, is because of earnings as well, right? We're seeing consistent buying happening, but it's not as strong. I mean, take a look at this candle here, which was a red candle at one point. Buyers were looking to step up and break out of this level. This at one point here was some sort of flag opportunity. But sellers came in. There was a lot of tug of war here. And look at the volume here as well. A lot of selling happening. So overall, this is concerning. It establishes almost like a double top on the smaller time frames On the weekly, it's looking like some consolidations happening. And on the monthly, it's a square top. So, if this candle is an important indication of buyers stepping up, sellers are also creeping in. I want to see it hold this 200 plus level. If it really needs to go down and test the 167 level, maybe these would be potential areas to buy. But in today's market, you just want to be super cautious on getting the best price and not going fully in. And Apple is just one of those tickers where it is looking promising on the higher time frames, but with upcoming concerns on hardware technology, whether it can overcome this challenge with its service-based business, keep costs low, and at the same time invest heavily in research and development continuously so that Apple Intelligence and other technology that it's implementing into its hardware is promising and is a good competitor for other manufacturers that are taking over its Asian markets, then I think you're going to see more bullish price action. But objectively, you can take a look at the charts and see where there's some areas to enter. And usually it's in the daily time frame where you get short-term opportunities to trade it. And on the higher time frames is when you can sort of see the big picture. So overall, always have risk in mind. Apple still looks all right. It's still trending up. There's nothing super concerning other than maybe this square top. And let's see how it pulls back into this 200 plus level and holds to see what the future holds for Apple.
Yeah, really, really interesting on the charts. But yeah, let me just share my screen. I want to do a side-by-side comparison of what I was talking about when I said it's a cause of concern. This is Alphabet's revenue by geography. You see everything's green, right? Minus this one small decline in Asia back in God knows when. But let's look at the same thing for Apple. 1, 2, 3, 4, 5, 6, 7, 8. 8 continuous quarters of decline in China. It's just started to build on Japan. It was losing business in Americas. It's not doing that great in Europe. It's just concerning how they've not been able to build on their opportunity with China, especially China. You see, this is such a bad chart for Apple. It's not been doing good. And all these analysts, they kind of that track Apple, they know that China markets are the major, drivers for growth in terms of revenue for Apple. And the reason Apple's not doing good can single-handedly be attributed to the fact that they've lost market share in China to other Android-based companies like Huawei and Xiaomi.
Okay, so some cautionary tales for Apple, more promising indications for Alphabet, but overall, both are still bullish to some extent. There might be some neutrality on Apple, and I would be curious to also see if it holds the levels outlined on the technical analysis. But yeah, that's concerning that it's losing quite a bit of market share on the Asian markets. These other brands are quite impressive, I'd say.
Yeah, and innovation is on a different level in China. You can't kind of rely on the same innovation levels to kind of play out in Europe, for example, as in China. The Chinese market's a lot more saturated and a lot more advanced in terms of tech that it can develop. And a lot of these companies like Xiaomi, like Huawei, and with their trifold phones and whatnot, they're just innovating on a different level than what Apple's used to. And to hold a contrarian view, I would actually, maybe in the long run, it works out fine for Apple. But if you're swing trading, I would really put my money on Alphabet rather than on Apple, just because things are not working out. The numbers, obviously, maybe iPhone numbers, they beat estimates. They might be doing well. But if it loses market share over 9 consecutive quarters in their biggest market, that's a real cause of concern. So, I mean, we've got a clear winner in terms of fundamentals. Alphabet trumps Apple. But on the technical side, yeah, I agree with you. Both of them look quite decent.
Yeah, I agree. We really appreciate you tuning in to another episode of Epic Markets. This is Babar Trades World.
And this is James Invest.
If you gain value from this video, make sure you subscribe.